All right, and we are live again tonight. This is going to be a fairly short show and update on the oil market. So oil futures opened up, and the price swings in oil have been very violent already in just a few hours. Oil opened up initially up 11%, and it is already crashing now down 6%. Why? In my opinion, it's because people are starting to digest how the OPEC Plus meeting between Saudis and Russia, it is delayed officially. What I will say, though, is that, as you can see there on your screen, I think tensions are rising very, very rapidly between Putin and the Saudis. So Putin lobbed literally a molotov cocktail at the Saudis in the last couple days. According to this article here, he alleges that the Saudis' efforts of increasing oil production are to eliminate competitors who produce so-called shale oil. Now, I've talked about this a lot. Some people have labeled it a conspiracy theory. I've been an oil analyst for a long time. That was my day job in the past. I worked with Robert Rapier, who I've interviewed in the last couple weeks. Robert actually just put out a new article on oil price yesterday called Demand Destruction Will Decimate Oil Prices. So I'll put that in the information and description section. So the demand side of the equation for the oil market is still being decimated. Now, President Trump, for the last couple weeks, has been jawboning whether he's going to debating putting tariffs on foreign oil. There's big issues with putting tariffs on foreign oil imports. The main reason is the Gulf Coast refiners. If you're not, and I've gotten a lot of flack for this from people who don't know anything about the oil market arguing with me, who started calling me names. So let me just give you the facts here. The Gulf Coast refiners, more than 10 years ago, they made very big investments into upgrading their refineries to handle lower cost heavy sour crude oil, which was being imported at the time from Venezuela, Canada, and elsewhere. And so initially they needed heavy sour crude, and this was before the shale oil revolution with fracking and Wall Street and pension funds and private equity throwing trillions of dollars at shale oil to get the cost down and pretend that it was economic. And so these refiners now are not equipped to fully handle just shale oil. Now, maybe they could switch back. I've gotten conflicting reports about that. In general, they prefer the more energy-dense heavy sour crude because they can make a lot of different products with it. So the shale oil that the refiners buy from the shale oil producers is often at a fairly steep discount. And normally what the refiners have to do is they have to blend it. So they have to blend the shale oil, which is a lighter crude, lighter sweet crude. It has to be blended with a heavier sour crude, a more energy-dense crude, to make gasoline, jet fuel, the other petroleum products that the refiners make. So anyone who tells you that it will be ho-hum easy, no costs involved, to switch to shale, and that we should tax the living crap out of all imported oil does not either doesn't know this or doesn't understand this. It is very simple. Okay, study the oil refiners. The oil refiners made the switch before the shale boom. They did not see that coming. Many people in the oil industry did not see that coming because they thought that shale oil would not be economic, and they thought that no one in their right mind would throw trillions of dollars in capital at shale oil to try to lower the cost and try to make it economic with very limited results. So Trump has tried a number of different strategies. He's talked about also doing massive buys of the Strategic Petroleum Reserve. Now, Shy Girl, Tracy Schuchart, did a podcast interview. I'll put that in the information and description section. I'm not going to play that. She did that in the last couple days. It's really good. I listened to it a few hours ago. It's about 30 minutes long on the oil market, where she talks about how the Chinese are stockpiling oil. But the main problem in the oil market right now and why the oil price is down so much on the futures has to do with the demand side of the equation. So yes, there was not supply cuts officially announced, and yes, the market is upset about that. However, if you pay attention to professional oil traders like Eric Townsend of Macro Voices, he's a professional oil trader. He does this all the time, Monday through Friday, trades oil futures contracts, oil stocks, oil ETFs, Tracy Schuchart. And if you look at the website on oilprice.com, one of the main themes, and you will see lots of articles about this, lots of information, lots of data, is the demand side of the equation for the oil market. Because it's a commodity, it's supply demand, oil is the master resource. So we've had I'll talk about the Putin Saudi Arabia article more in a second, but I predicted this at the end of January and early February for my Patreon account contributors. I did a oil only podcast behind the paywall there, and I predicted that this would happen over 2 months ago, and it happened this past week. That U.S. shale company Whiting Petroleum becomes the first major bankruptcy of the oil price crash. So by Arathi Nair, article came out from Reuters April 1st. Whiting Petroleum filed for Chapter 11 bankruptcy. The U.S. shale producer said on Wednesday, the first publicly traded casualty of crashing crude oil prices that are expected to bite into record U.S. output. Whiting was once the largest oil producer in North Dakota, now the second biggest oil producing state in the country. It has agreed with creditors to cut its debt by about $2.2 billion through an exchange of some of its notes for 97% of new equity. So basically means that the current equity holders have gotten wiped. Existing shareholders will own only 3% of the reorganized company. So if you were betting on a turnaround, if you bought Whiting shares, if some new paid newsletter writer recommended Whiting Petroleum shares 2 months ago, and there was a couple on Seeking Alpha that were, you got wiped. I doubt you're going to get an apology from them. I tried to warn people. I warned my patrons back then. I thought it was a fairly interesting, in my opinion, a shorting opportunity back then, along with the deep water companies that were, because I was reading the SEC filings for some of the deep water companies, and it was really, really ugly. So Whiting Petroleum, they produced in the Bakken. Their costs were too high. Their balance sheet was loaded with debt. They were a higher cost oil producer because they were in the Bakken. Also, their transportation costs to get the oil down to the storage facilities and the refiners was a lot higher than a lot of other oil producers. So there was a lot of fundamental reasons why Whiting Petroleum was in trouble 2 months ago, and I laid that out. Laid the case out why. So it was not rocket science. It was just good analysis why Whiting Petroleum was in trouble a couple months ago. If oil prices didn't rebound, oil prices did not rebound enough, hence why Whiting decided to go bankrupt. Really unfortunate for people who are betting on the turnaround there. I know a lot of people are bottom fishing for some of the oil stocks. This is a case study in being very cautious about what you buy, individual companies, when you bottom fish. If you do bad research, you will get burned very, very bad. Okay, let's go to the Putin article. While it appears an unexpected emergency virtual OPEC Plus meeting planned for Monday has been postponed, pushed back to later in the week to allow more time for negotiations, it's likely that we'll actually see the heated blame game for the collapse in oil prices ratchet up. And in the meantime, oil is set to crater come Monday as the feud is only expected to get uglier. In the meantime, let me add here that I think President Trump is not done trying to jawbone things. So he's been sending Jared Kushner out to the Middle East to try to get oil production cuts there. A number of the OPEC countries do want oil production cuts, but the Saudis do not. The Saudis are fairly adamant right now. They want Russia to agree. And Putin also threw the Saudis under the bus. Because the Saudis did, when I was an oil analyst for my day job with Robert Rapier years ago, the Saudis did, and I was did try to kill shale from 2013 to 2016, and there was some bankruptcies, but it was not as successful as the Saudis thought, and they wasted many, many hundreds of billions of their reserves, of their all the trade surpluses they had accumulated with all the petrodollars and all the profits from oil. They wasted a lot of that trying to kill shale oil, because the cost for shale oil did come down, but most importantly, the capital available for shale from 2013 to 2016, there was a lot of bankruptcies for shale in 2015 and 16, but a lot of the bigger names, even back then, Whiting Petroleum and others, were still able to raise capital. So even though they were in trouble, even though companies like Oasis Petroleum with John Paulson, hedge fund manager, I think he's out of the position now, but he still had an enormous investment in them back then. But the Saudi oil minister, Robert Rapier, and I were talking back and forth back then, of the Saudi oil minister was quoting production costs for shale oil back then. So he was saying, like, back then, for example, that the production costs for shale were $65. We don't want to defend a higher price. We don't want to give up market share. And if oil were to go down from 100 down below 65 for a while, we don't care. So that's, to paraphrase, that's what the Saudi oil minister said back then during that time period. And the Saudis were heavily criticized for it, but their strategy was very, very clear. So back then they wanted to bankrupt the shale producers. Then it failed. They spent a lot of money. I think they didn't realize how much capital was truly available for a lot of the shale oil producers. Also around that time, I think the Dallas Zero Hedge and the Dallas Federal Reserve Bank got in a big fight. There was a lot of articles and tweeting back and forth before Zero Hedge got blocked from Twitter, where Zero Hedge alleged that the banks were told around the Dallas Fed in the Texas and Oklahoma area to not call in loans. Okay, let me get back to this article here. Indeed, the aggressive war words has started. I would call it Putin threw a Molotov cocktail. With Putin offering a biting Russian narrative aimed at the Saudis in remarks on Friday. Quote, it was the pullout by our partners from Saudi Arabia from the OPEC Plus deal, their increase in production, and their announcement that they were even ready to give discounts on oil that drove the crash alongside the double whammy of the coronavirus-driven drop in demand, Putin said, according to Bloomberg. Quote, this was apparently linked to efforts by our partners from Saudi Arabia to eliminate competitors who produce so-called shale oil. End quote. Putin continued. Quote, to do that, the price needs to be below $40 a barrel, and they succeeded in that, but we don't need that. We never set such a goal, end quote. So the budgets for Russia and Saudi Arabia, Tracy Shygirl talks about it in her new podcast interview that's out. Again, the link will be below this video afterwards in the information and description section. The Saudis need around $80-something a barrel oil to balance their social program spending and their government budgets. And Russia needs, I think, around $50-55 a barrel. So Russia's more conservative. Saudis are more aggressive with their social spending. So that's why the Saudis are trying to kill shale and then drive the oil price back up later in a couple years from now after the global economy does restart. But it is very interesting that Putin would say that publicly. I'm quite surprised he would say that publicly. So negotiations are not going well on production cuts if Putin says that. Thus, in one fell swoop, and Putin is willing to turn on a dime, do a 180. He's been playing the U.S. and China against each other for a better deal for Russia for a while now. Thus, in one fell swoop, Putin, ironically enough, framed the new war on U.S. shale as in reality a Saudi dirty little secret and motive, despite all spin to the contrary, perhaps also seeking to inject division and tension in the close Washington-Riyadh alliance. Both Russia and the Saudis opened the taps and prices plunged following Russia's early March declaration that it would be quitting the OPEC plan to slash output by 1 million barrels per day, cautioned also in Russia-led non-OPEC countries, cutting 500,000 barrels per day. Moscow reasoned that ultimately U.S. shale oil producers would be the ones benefiting as they had previously, and that was from the 2013 to 2016 period when the Saudis did try to kill shale, and there was bankruptcies, but not nearly as many as the Saudis thought, plus they blew through a ton of their trade surplus, foreign exchange reserve, filling the sovereign wealth fund, filling the gaps in earlier curtailments. Putin's attack has, for the time being, had the immediate effect of forcing Riyadh into the awkward position of having to deny it could have been a willing participant in deeper machinations to crush U.S. shale producers in a price war. But as I just talked about a couple minutes ago, the Saudis freely admitted this. The Saudi energy minister 2013-2016 was freely quoting in public what the production costs were for shale oil and how they could drive the price lower than that and take back market share. This as already the steep drop off, in prices have left some U.S. shale producers saying they're ready to initiate voluntary production cuts amid the ballooning oil glut, as the Wall Street Journal reported Friday. The production cuts I don't think are that meaningful yet, and my patrons know this. I laid out an extensive article behind the paywall this past week on why I think the oil market has not bottomed yet, because I think demand is still falling, especially here in the U.S., like a rock. I don't really trust the Chinese data. I know they're stockpiling oil, but I don't trust their economic data. Okay, and the other major point I wanted to bring up, and I talked about this in the Patreon article, was that just this past week, we got a 4-year record crude oil inventory build. So if oil-producing companies are saying that they're cutting oil production, why are we getting, in just the last week, a 4-year record on crude oil inventory build? So it doesn't really add up yet that there is large oil production cuts. That's my opinion. So normally, if the shale oil producers are telling the truth that they're cutting oil production, instead of a 4-year record crude oil inventory build, we will start to see enormous crude oil inventory drawdowns or the storage tanks will not be nearly as full. And meanwhile, I'm seeing all these articles all over the place about how much storage for oil is already being used. This article came out 2 days ago from the HellenicShippingNews.com. So the United Arab Emirates Fujairah oil storage tanks at full capacity, according to sources. So storage tanks in the United Arab Emirates Fujairah bunkering and oil hub in the Middle East have reached full capacity for both crude and oil products. 3 industry and trading sources told Reuters lockdowns to restrict the spread of the coronavirus have affected 3 billion people worldwide, shredding the demand outlook and leading companies to cut crude refining as storage space dwindles. Located on the east coast of the United Arab Emirates at the entrance to the Strait of Hormuz, Fujairah is one of the 2 main ports in the region along with Omar's Sohar and is a busy refueling point for tankers taking crude on long voyages out of the Gulf. The Fujairah Emirate is keen to boost its status as a global trading hub by increasing its port storage capacity from 10 million cubic meters to 14 million cubic meters by 2020. Traditionally, it focused on tanker fuel and refined oil products, but has also expanded into crude storage in recent years. Oil officials at Fujairah could not be reached for comment. Tony Quinn, chief executive at Tank Bank International, told Reuters that crude and product storage tanks at Fujairah are full, while Singapore's oil product storage tanks are also nearing capacity. So this is an ongoing story, and you have a lot of hedge fund managers that are doing the super contango trade. Hopefully they didn't do the super contango trade with paper oil futures contracts to deliver at a later date when the oil price was higher, because they're going to be getting a lot of margin calls if the oil price does go lower. So there's a lot of evidence for a month now that the amount of oil storage available has been decreasing, that the storage tanks are full. You have the U.S. President Trump with the Strategic Petroleum Reserve, which is another thing Trump has been jawboning about. Congress, because the Democrats control the House of Representatives, the Democrats actually blocked President Trump from getting funding to add oil in the Strategic Petroleum Reserve. So we'll see how President Trump is able to get around that. He probably will be able to get around that, considering how much money has been created, how much currency, has been created in just the last couple weeks. But as of now, I haven't seen anything concrete about a purchase plan for Strategic Petroleum Reserve. Trump has just said he will probably do it. He hasn't said an amount yet. But according to Tracy Shigirl, there is not a lot of oil storage left in the SPR, Strategic Petroleum Reserve. So even if they did start buying, it's not like they have hundreds of millions of barrel capacity to store. Okay, let me take a look for super chats here. Got a couple. Thank you, Justin, for the super chat. I appreciate it. Okay, super chat from JB Weld. You give me a lot of super chats. Thank you very much. Are you a Patreon account contributor? There is a lot of value behind the paywall. I know you asked about my track record and my background in finance. I have a lot of I've been doing this for over 10 years now. I have a lot of good contacts. I also cite my sources for the most part. Some sources are off the record, though. Like my source who's at the upper management of one of the credit ratings agencies, I can't tell you like the guy's name and where he works, because, you know, some of the information I get, not supposed to be sharing that with a lot of different people. What do you think the future or Canadian crude is, since it's so poor quality and cheap? Does Canada become an importer of U.S. oil after this crisis ends? Is the Keystone Pipeline defunct now? Well, as long as Democrats are in control of at least one house of Congress and maybe the White House, we'll see what happens with the 2020 election now. I mean, I thought Trump had a pretty clear lead prior to the coronavirus. Now, I don't know. All bets are off. Jim Rickards just said in a recent interview on his models that it's 50-50 who wins, Trump or Biden. But there's a lot of Democrats that want Andrew Cuomo to run, the New York governor. So do I think Canadian crude? It's tough to say what could happen with Canadian crude. I mean, I could see the Canadian government trying to do something stupid and trying to nationalize some of the Canadian oil companies temporarily, maybe giving them some capital. It's really tough to say. It sounds like the Canadian government stepped in and helped out the Canadian banks. So the Canadian banks appear okay for now. Although the guy from The Big Short, Steve Eastman, he was heavily short Canadian banks. But for now, I think they're okay. I haven't looked at the stock charts for Canadian banks in a while, though. The problem with oil sands or tar sands or bitumen is that it is much higher cost and it's more of a mining operation. Plus, you have the environmentalists fighting it. So you have to pipe all that stuff to a port, or you have to pipe it down here to the US. It is much higher cost. Very capital intensive. You need oil at least like $40-50. I know in the past they've claimed their costs are lower, but then they don't make good profits. And normally the balance sheets of those Canadian oil sands companies, the balance sheets are very leveraged with a lot of debt. Does Canada become an importer of U.S. oil after this crisis ends? Canada might temporarily be an importer of U.S. oil. I could see Canada temporarily being an importer. I don't think that's permanent. Look, as soon as we get back to anything close to pre-coronavirus level economic activity, I think the oil price is going to take a big jump. But that's anyone's guess how long that's going to take. Is it going to take 12 months, 18 months, 2 years? I don't know. It's looking very likely now that it will not be 6 months. I mean, we have states here in the U.S. like Virginia. Virginia's saying at least June. They have a stay-at-home order, except for essential stuff like grocery stores, to at least June. So I don't think the people who are saying that 6 months from now we're going to be back to normal pre-coronavirus level economic activities, I'm not as optimistic. The movie companies are putting movie premiere dates for November and December. So for now, they think that there could be some economic activity back by November and December. We'll see. I mean, what I would say is China, the economic data for China is nowhere near, they're inflating it very heavily. I don't trust any of it. So they are stockpiling oil, but I really think 6 months is way too optimistic. I mean, we're looking at least 12 months, at least, before we get back to anything close to pre-coronavirus level economic activity. And then, look at the restaurants and the hotels and the casinos and the travel companies, the tourism, those businesses are going to cruise ships. Those are going to take a lot longer. People are going to be a lot more skeptical about getting on a cruise ship after what has happened. Now, people will eventually come back, but it'll probably be a trickle at first. It's going to take time to build up to levels of prior customers, considering what we've seen on the news. That's my opinion. Richard Lejeune? No, I don't know who he is. I've never seen him, sorry. I don't spend a ton of time on Seeking Alpha. I mean, I look up financial statements on Seeking Alpha, some gold mining stocks, some occasional oil stocks. I don't spend a ton of time on Seeking Alpha. Most of my time is researching and then making sure that I have content here for the YouTube channel, and then occasionally like an article or some technical analysis charts or an audio podcast behind the paywall on Patreon. That takes up a lot of my time. Sir Memalot says we started QE for the first time in Canada. Yeah, I did see that. So that's probably going to help out the banks. So my guess is it helps out the banks first, and maybe Canada temporarily, and then they move the bad assets. So some of the bad credit card loans, some of the bad second mortgages or home equity loans or credit card loans or auto loans, they move those into like a government-owned bad bank. They might do something like that. It would not surprise me if Canada does temporarily either buy equity or nationalize one of these Canadian oil sands companies, and then when oil prices rebound, the government of Canada... Oh, CCP troll. Bye-bye. It would not surprise me if the government of Canada either buys an equity stake like what the US is planning on doing, or what the US did with AIG, and then the US eventually sold its AIG stake for a profit. I think same thing with General Motors. It would not surprise me if Canada does something like that with the oil sands companies, where the Canadian government becomes a large equity holder in a Canadian oil sands company to help them out, and then when oil prices rebound, then the government of Canada sells their equity stake. So there could be a temporary nationalization where the government takes full ownership of the company, or they buy like an equity stake like 30% or 40% and infuse them with cash. And then once the oil market rebounds, then they sell their stake. I think that's what governments are doing now. I think that's what governments are planning on doing now. Wow, I have almost 500 people watching and not even 100 likes. Please smash the like button. Sir Memalot says the Bank of Canada is buying mortgage-backed securities and other garbage. Yeah, so it sounds like they're already doing this. So they're protecting the big banks in Canada so they don't all go bankrupt, and they're buying all the bad assets off their balance sheets, and they're moving them into like a government-controlled bad bank. That's what it sounds like Canada's doing. Michael says, too dangerous for Trudeau to touch oil. Well, we'll see what happens to the oil sands companies then, because the last time I looked at them, the balance sheets had way too much debt. Not good. Orpheus says, 5 morons hit dislike. What the hell is wrong with these people? I have trolls and stalkers. I have some cyber stalkers. I had an in-person stalker, so that's why I don't like talking about exact details of around where I live. And so, I live in the DC metro area, but I don't like talking exact details. Because I did have someone a couple years ago literally trying to follow me, where I don't go out drinking really anymore, but when I used to on the weekends go out for a beer or two, I had people following me and trying to confront me and stuff like that. I had to threaten to file a restraining order. It was a mess. I think it was the guy 2 years ago who lied to the Virginia State securities regulators. I think that was the same guy. So I do have cyber stalkers, and I do have one in-person stalker. He's a loser. No one told him to gamble hundreds of thousands of dollars of his savings away on junior mining stocks. He did it all on his own. He's older than me with multiple business degrees. He also likes flying down to Colombia and I think Peru every like 6 to 8 weeks to bang hookers. Yeah, so that's my stalker. He occasionally sends me a really nasty email. He still occasionally sends me a really nasty email. Okay, so I want to thank everyone for listening. I have a lot of articles that I'm going to put in the information and description section, along with the Tracy Schuchard interview. That is a must listen. So that will be in the information and description section. The bottom line, though, is that the oil price a couple hours ago when futures opened was up almost 12%, rally up $3 at first. And here we go, oil futures contracts down. They were down 6%. Now they're rallying a little bit. It's down in the 30 minutes or so since we started, 30 minutes ago since I checked. Down only about 4-something% now. So there's been a really wide range in oil prices. But in the real economy, the demand side of the oil market, so for gasoline, jet fuel, petroleum products, other petroleum products, the demand side is just not there. The estimates I keep seeing on the demand side are between the demand collapse for oil is between 15 million barrels per day collapse and 20 million barrels per day collapse. So if those numbers hold, and Robert, my good friend and oil mentor Robert Rapier just put out an article about this. So if those numbers hold or those estimates are low, let's say we go over 20 million barrels per day collapse in demand for oil, we're going to have a lot lower oil price in the short term. And you're going to have to see a lot of supply cuts from a lot of the players involved. And there's just not the capital available for these private oil companies. Also, a lot of politicians hate oil companies too, so that doesn't help either. Then you have companies like ExxonMobil. ExxonMobil already got one credit ratings downgrade a couple weeks ago from S&P Credit Ratings Agency, and they're on the watch list for a second credit ratings downgrade in only a couple weeks. And then ExxonMobil also, this past week, got another credit ratings downgrade from Moody's. So ExxonMobil has had 2 credit ratings downgrades now from 2 different credit ratings agencies in the last couple weeks, and they're on tap for a third. So not looking good for ExxonMobil in the short term. I don't think they'll go bankrupt, but there may be a very painful dividend cut in the near future. Some of these larger oil companies, oilprice.com has on their one of the headline articles that big oil raises debt to ride out the price crash. So if you are looking for yield, from some of these oil companies like Royal Dutch Shell and Chevron. Again, I've been saying for weeks now that this is still a falling knife. I'm not buying any of these things yet. You definitely want to read that article. Big oil raises debt to ride out price crash. It's on one of the first couple articles on oilprice.com. The other article that came out today too is The Oil Giant Drowning in Debt about ExxonMobil by one of my favorite oil and energy journalists, Nick Cunningham. So all of these articles will be in the information and description section. Thank you everyone for listening. And I'm going to keep working hard to produce some of the best financial information, education, research, and analysis available out there on the internet for free and also behind my Patreon account paywall. That is why I have almost 700 patrons right now. It is growing unbelievably fast in the last 5 or 6 months. And you could take a look behind the paywall for only starting as little as only $5 a month. Thank you very much to my PayPal, monthly PayPal contributors who also help chip in. It's really appreciated. People tip me once in a while. You can go to my website, and there's a donate link if you want to. You can donate one time through the PayPal link on my website, wallstreetformainstreet.com. Spelled a couple different ways. I own both of the domain names.